Welcome to the Explainer. Okay, so there's a huge, high-stakes debate unfolding on Wall Street right now. And honestly, the outcome could completely change the game for how you and I build wealth.
So here's the big question we're tackling. Should these super exclusive investments, the ones that have been locked away from most of us for decades, finally be available to everybody? For years, this has been the private playground for the big guys, the huge institutions. But those walls, they might just be starting to crumble.
All right, first things first. Let's make sure we're all on the same page. What even is private equity? Well, you can think of it as investing in companies before they hit the big leagues, before they're on a public stock exchange like the NASDAQ. It's all about getting in on the ground floor way before everyone else.
Okay, so let's dive right in. We're going to start with the argument for opening things up. And the people who support this, they're saying it's not just a good idea. They see it as a matter of fairness and a huge, huge opportunity for your own portfolio.
So where do you start? Well, you got to look at the track record, right? And the numbers here are pretty wild. Historically, private equity has absolutely crushed the public stock market. I mean, we are talking about the kind of returns that, up until now, were basically reserved for giant pension funds and those massive university endowments, not for the average person.
The folks who are for this really boil it down to three main things. First up is the chance to get what they call alpha. That's just a fancy finance term for making money because of skill and special access, not just because the whole market is going up. Second, you get better diversification, right? These private deals don't always move in the same direction as stocks and bonds. And finally, and this is a big one, you get access to growth. So many of the most exciting companies are staying private for way longer these days. This is where the action is.
But of course, that's only one side of the story. Let's flip the coin and look at the other side, because the critics, wow, they are not just being a little cautious. They are sounding a serious alarm here. They are warning that the risks are absolutely massive and could be, frankly, devastating if you don't know what you're getting into.
So what's the catch? I mean, there's always a catch, right? Those amazing returns we just talked about, they don't come for free. There is a big price to pay, and you absolutely have to understand that trade-off before you even think about jumping in.
And this right here, this is probably the single biggest risk. It's a word you're going to hear a lot. Illiquidity. Think about it. If you own a stock, you can sell it and get your cash in seconds. But with private equity, your money is locked up. And I don't mean for a little while. I mean, think 10, maybe even 12 years, with literally no way to get it out, no matter what happens in your life.
And there's this other kind of sneaky danger that people call volatility laundering. See, with the stock market, you see the price bouncing around every single second. But with private investments, they only get priced maybe once a quarter. So it looks super stable, but that smooth line can hide the real risk and give you this false sense of security. It's a dangerous illusion. Oh, and the risks don't stop there. Not even close. You're walking into a minefield, really. First, the pricing is so opaque. Like, how do you even know what your investment is actually worth at any given time? Then you've got these massive fees that can just eat up your returns. And you have to wonder if the fund manager's interests really line up with yours. Heck, there's even a bigger systemic risk. What if a bunch of regular investors all try to get their money out at once? It could cause some serious problems for the whole market.
Okay, so we've got all this on the table now. How on earth do you weigh that promise of amazing, market-beating returns against these really, really serious dangers? What's the final verdict here? When you just lay it all out, side by side, the whole conflict is crystal clear. On one hand, you have the promise, higher potential returns, and access to that pre-IPO growth. But on the other hand, you have the peril. Your money's locked up for a decade, you don't really know what it's worth, and the fees are huge. It's that classic textbook battle, huge potential reward versus some very significant risk.
And really, when you strip away all the jargon and all the details, this whole debate just boils down to two things. Two completely opposite ideas about what the future of investing should look like. Two different answers to that question of who gets a seat at the table. So, the final question really comes back to you. Is opening up this world a real step towards what you might call financial democracy? Giving everyone a fair shot at the best opportunities out there? Or is it just a dangerous illusion? A trap waiting for people who just aren't ready for the very real consequences of playing in this high-stakes game?